So we are seeing a lot of volatility in the equity markets because of tensions about tariff and geopolitical tensions that are going on in the world. But since Liberation Day, which happened in April, when the tariff discussion started at the White House, and when President Donald Trump showed that board with very high numbers applicable to each country, that led to a huge drawdown in the equity markets. You saw every asset class go down, right from gold to all kinds of commodities as well as equities internationally, because this was a complete change of the thesis with which the US has operated over the last many years. So US is now looking at reducing its fiscal deficit, bring positive budget every year, and for that the idea is to get revenue through tariff. So Donald Trump wants IRS, which is External Revenue Service, not just IRS, Internal Revenue Service. So there is clearly a change in the way US thinks. And that volatility that started in April of 2025 saw a complete spike down and then spike up, because the market clearly figured out that this tariff at those rates is not what is going to happen. A tariff of 10 to 15% is likely to remain, and we saw that happen with UK, we saw that happen with Europe, the largest two trading partners. But at this point, we are still looking to sign final deals with China, the major trading partner for US, and then India. So at this point, there is volatility in those markets. We saw a drawdown in India. Indian market is kind of consolidating right now. But when it comes to S&P 500, the market feels there is not going to be a huge drawdown going forward with respect to tariff. But one thing that can impact is higher inflation and lowering of profit margins of the S&P 500 companies. But all of this can change depending on how artificial intelligence, innovation, robotics, and other technological advancements that are going to take place in the next 15 months. So time will tell whether there will be a lot of loss of jobs, which may be one of the potential reasons for a recession in 2026 or 2027. But at this point, be positive about equity markets. Trend is your friend. Price action looks very good. S&P 500 is doing well. Nasdaq is doing well. With the interest rate cut, small caps may continue to do well. What we have seen in the last 1 week, IWM is kind of progressing, and we are hoping for a 50 basis points cut in September. So, as I said, friend is your trend. You can't predict what is going to happen in the future. So we are 100% invested in the equity markets and continue to see that going on till we hit 50-day moving average or a 200-day moving average. So at this time, we are long in the equity markets. Thank you.